Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Hey, man. How are you?
Felix. I'm good. I'm in shock, actually, because I just read that McDonald's is paying people $50 to get an interview.
They're paying $50 to get an interview?
Yeah,
Sign me up. I'll go. I'll interview them. Like, what the hell are you doing? $50, man. I did say I saw the Amazon too. People raising wages, so people paid attention. You know, the funny thing is, the way I look at the world is Amazon stole everybody's business. Right? Retail stores, they do it better now than the retail stores. The retail stores just catch up. They spend all this money to just catch up. And then Amazon says, all right, now we're going to take all your employees too. We're going to give them $1,000. I think they said $1,000 signing bonus plus $100 if you show that you got your vaccine. They're just like, you know, whatever, come on in. They take the best workers and there you go. So I don't know. It's interesting. You know, I always, every day I'll take 15, 20 minutes trying to think about how do we solve the world's problems, you know, with policy and where does it go? And so it always leads back to you can't let the rich get too rich and the poor get too poor and the middle class leaning towards the downside. So, you know, I think it's the only way out. So at least I got to step one. This is what's going to happen. And then in the backdrop, like I've explained over the last week, I still have a belief that perhaps we're already at war with China and CIA doesn't want us to know. Nobody wants us to know. And there's stuff going on, you know, there's stuff going on in the background where, you know, we always look at China and say the China media is controlled by China. Like they go as far as controlling what you see on the internet. We're not there, but you know, to some extent, you know, what we see in the news is whatever they want you to see. And so they probably got the call yesterday, because I'm watching CNBC this morning. They probably got the call yesterday going, every single newscaster better be positive today and better talk about like a bump and take a look at this and we're climbing back. And, you know, because that's all it was. It was all like, did anybody even, oh yeah, everything's bouncing back. Look at this. Let's look at the leaders. Which ones are it? So, you know, it's almost like, we're trained as almost like puppets to, you know, the market goes up and the media is pumping, you know, everything is good. And yesterday it was a disaster. There was inflation coming. Now inflation's good. They got guys on TV talking about how inflation is good. And to some extent, good inflation. We talked about good and bad inflation. Good inflation is good. The inflation we got where nobody's working and China's buying every commodity and the prices are going up like this and it's literally lopsided. Probably not good, but nobody's talking about that, and nobody will say the S word, the stagflation word on TV. It's sort of like you are not allowed to say that word. That said, there we are. But Tesla also makes an announcement. What is Elon Musk saying? Now he's saying that they're not accepting Bitcoin because of what? What the energy, the amount of energy it takes to mine the Bitcoin. So he doesn't environmentally, it doesn't fit with sort of what Tesla's doing. And then you got people saying, hey, doesn't he know that most of the world is already moving towards clean energy mining for Bitcoin? And so it's a little odd. The whole thing is a little odd. On the flip side of Bitcoin, which is it loves the 50,000 level. You can't break this 50,000 level. It goes below that and everybody seems like they're coming in. But 0.72, Steve Cohen says, quote, he's getting big in crypto. I bet you he's already in, and now he's actually be selling anybody who buys it. You know, he's gonna you know, they play long short. They're buying one, selling the other. They're finding things structurally. I'm sure he's got major investments in a lot of venture capital. You know, new venture capitalists who are putting money into these newer crypto names that are coming out. So fintech. Third, this is a good one. IRA Sohn. Okay, so every year Look, UOA here, we're talking about catching the sharks and trying to catch the big trades. IRSON is a conference in New York, hedge fund conference, made famous probably about 10 years ago when the Bill Ackmans of the world and Einhorns were actually out there really pushing stocks. Like you can actually, probably going back now, I think IRSON's probably 15 years, but it was really getting really big in 2007 to 2000. Let's call it 12, I think, right around 2008 to 12. And people like David Einhorn would come out and make a pitch on a stock on a short side, and it would drop like 15-20%. I think the first time he brought up what was one of his big shorts? I'm trying to remember right now. But he would bring up a big short, it went down. I think it was the ratings agency. MBIA, that was one. Ackman brought up HLF one time, stock tanked. So a lot of these guys, they come up with their ideas and they pitch them, and people buy them and they're like, wow, it's a great idea, and people get long. The thing is, usually see, I'm always in tune with the IRSON because you usually see options activity prior to the announcement. This is a legal way to sort of front run yourself, right? So, if I'm going to give a big speech, nobody's going to care about what I say, but I say, oh, I like this, and everybody goes and buys it, right? Because I said I like it. So when Einhorn used to do that, not so much anymore, but when he used to do that, things would fly. But the speakers are allowed to obviously buy stock ahead of whatever they're going to say. It's their idea, their money, they're doing, it's not inside information, it's their research. So you would see a lot of this buying calls in front of the names or buying puts or, a lot of activity before it's released. And Einhorn was the speaker yesterday, and it was a Zoom conference. And he got up there and he started talking about a name that we've been seeing call buying and wondering who's buying this, for the last month and a half, 2 months. And that was in tech, TECK. So Einhorn made a pitch on tech yesterday and how it was going to go up and how it was great and whatnot. And I thought it was good to let you see how it works, that, they're buying the stock. They're buying the one that you saw. I think it was Brenda. She had seen it the first time. Said, any comments on tech? Well, you spotted David Einhorn there. Did we have to know it was a shark? No, it's by the size, by the way it was traded, by what we're doing here. We knew it was one of these guys. Turns out it happened to be David Einhorn. Now, lastly, 13Fs. Today is May 13th. Tomorrow's the 14th, 15th. So in the next 3 days, you will start seeing hedge funds first quarter, end of first quarter portfolios starting in the next, let's call it the next 3 days. So, pick your favorite hedge funds. You could see what they've gotten into. I can show you that. Let me just show you here. You go to top holdings. Holdings channel, and this is BlackRock. So BlackRock had just put theirs out, and you'll see that it's here, March 31st. So we're always going to be 45 days delayed from this, but I think it's just a good way to see what people were actually buying and selling. This is BlackRock, and you can see, going down the list, and it's good. Takes a couple of minutes. It's good to see what he was buying, or what they were buying and what they were selling. You could see call options, put options where they had it, and from time to time in something like BlackRock, you can see things that are interesting. I thought this was interesting. Intel. They were buying 13 million shares. They bought 2.2 million options. You got to divide this by 100. So they got long 23,000 options here. I think that because we were talking about Intel in the first quarter towards that end. So BlackRock was getting in there, adding to it. They already have a big position. They were just adding. They added, looks like about 4%, 5% to that position. So that was one that I thought was interesting. And Alibaba, they've been getting out and weeding that position down, I think, for the last 2 quarters, if I remember correctly. So again, exercise for you to go in. 13Fs, they're out tomorrow. And the next day, you got Point 72, you got Maple Lane, you got Third Point, you got Einhorn's firm. Go through the top hedge funds and start picking through what you want to see and the portfolios you want to see, and see if you can make any sense of it. All right.
Cool. Yeah.
Good.
Definitely.
All right. Good. So let's talk. Let's just jump into probably the weakest. I think it's one of the weakest stocks on the board,
Yes.
and that's Tesla. So I can't imagine the Bitcoin, and maybe everybody can tell us something different, but I can't imagine the Bitcoin news was that big. I mean, it's just not taking people. Maybe not. I don't know, but to me, it's just a small statement. He'll get back into it once if it means money for them, they'll figure out a way to get paid in Bitcoin and cryptocurrencies. I think the bigger story is really, I mean, we've looked at this for a while now. I think the biggest story is simply that technically the stock is getting a little dangerous here, and we've done this several times already, but we're looking at the 900 here, but it's really more this. Let's call it this down here, floating down here that we've been looking at. And then, this here trying to make its way up. But then here now coming straight back down to, if you take this to this, it's going to end up somewhere around 4.25. Okay. The fact that it's breaking the 200-day here, never a good sign. This is not a good sign for the stock. And, when you're in this pattern, it's a wind tunnel, if you will, right? The machines are doing exactly what the pattern is expecting to do. Not saying that it always hits, but it has a funny way of getting close, right? We did it in DraftKings, and sometimes it'll overshoot, but we were using the same sort of technique in DraftKings. This is not rocket science. It's just part of what we're looking at. The other, if we can just do a quick way, we could just erase it like this and then come back in. Another way to think about it is if we were using our lines, then we have a clear line here, right around here, this level. Call it, I'm never like trying to be specific with the actual, like to the penny. I sort of eyeball and say we're around here, right? Let's call it 570, 565, which is where we are here. It's a big level for the stock. Big level for the stock here. And what's going to happen at this level? Like, that's really the question. We have a lot, and I'll show you on, I will show you here on, let's look at open interest. Tesla open interest. I look for the puts because in general, when I'm looking, the puts, I can look at the calls, but you're not going to find many calls on the downside. So when you're looking at the downside, you want to see the puts. So if we're looking at like, let's call it 450 to 600, let's call it 650, just to get a much wider range and just try to pick out where everything is. You see that this right here, there's a lot going on in the 600 range. And when I say a lot, I mean, it's not a lot on a per share basis when you think about how much Tesla trades. But what happens is that every day there's so many day traders that the volume gets so big on the front couple of days. So Tesla is always one that is susceptible to these, you wake up in the morning and it breaks a certain level after the expiration. So expiration tomorrow, then you got next week, and you can see that if you go down all the way down here, you're seeing people playing around in the 550s. Not a lot, I would say a lot, but you got some in the 500s. I suspect there's probably some sales there in the 500s because the stock was coming from, call it not too long ago. Where were we? How long ago? 750. We were at 750, 700 only 2 weeks ago. So I suspect some of those options down there were down here at the 500 level. I suspect they're sales. But then I just also look at this and I say, let me try to figure out what it looks like on a bigger picture scale, where we have the 600 level, 40,000 contracts here. And it seems to be fighting through that. The stock is trading, around here. And I suspect that a lot of these are short. The 550 is short, the 500 is short, and the 450. I suspect more people were doing, either 1x2 put spreads or put spreads. And so, I think you're setting up for, usually what happens when people are short these, you're setting up for something, where it's not going to pay you out well. It'll make a sharp move to 500 and then shoot, just as sharp. It can move right back to 600, so that if you did the 600, 500 put spread, if you had this 100-point put spread and you paid, let's say $25 on the sharp move down to 500, it only goes to about, let's call it 55.60, and then it comes back up, and it never traded more than 55.60, even though it made the full 100 points. So this is something you just gotta, be aware of. But this is what I'm sort of seeing. Once they get rid of people at the 600, I think there's a lot of shorts here in the 550 and 500. That's just my read on watching this and where it was, the 750. How many people were buying the 500 puts? Probably not many, not for a few weeks. So now that it gets there, we're lockstepping all the way down. It gets a little bit more dangerous, including the fact that we are breaking sort of technical levels. So a little worrying. It's also causing a lot of trouble on, you got a double whammy on Miss Wood.
ARK, yeah.
You got a double whammy on her, right? Tesla's down, and he just poo-pooed Bitcoin, right? She's long coin. She's getting big in coin, and the charts look almost the same, right? It's literally, again, not rocket science here. Go look at it. It's all over the. You just Google Elliott waves, and you can see sort of how these patterns sort of hold, right? It's very similar, and from here to here, let's call it from here to here because I'm just going to go straight down. So from here to here, if I brought this down to right around, let's call it here, you're talking about 77, right? We were saying 90, thinking, it's not going to get too far below the 200. So this is the 200 level, 90 right around here, and then sort of trade back up. It had a strong day. It looked good. Again, we don't jump in until we see in all of these names, you want to see buying. You want to see it. One day doesn't make a trend. It's you want to see buying, and they've taken it now straight down. So this is a little dangerous of a position here. You can look at all the other names too that are, your lead horse is Tesla. Not just an ARK. We're talking about just fantasy names, we call them.
Right.
But you're looking at something like NIO too, and obviously they're taking their cues off the lead horse, which is Tesla. And this is breaking down. And again, this is just a technical setup. And the way it works is all these people that are, you're catching buyers here looking for this pullback from 64, buying, they're trying to buy. And then, excuse me. And then once it breaks this level, all these people that were buying on any negative news will turn sellers, and that's what pushes it down. So that's what we've been talking about, how these levels are very dangerous. And I don't mind the story about NIO. I don't mind, but this is where calls and call spreads work better than stock because it's such a dangerous level right here. Okay. Yep. Now what happens? You're 30. The other day it was trading. People were buying the 35, 36, 37 calls. In here, and that's totally fine as long as you're getting out of stock, right? It's sort of giving you a chance to say, I'm going to buy some calls cheap. If we're right, it's going to 42, 44. If it's not, you're stuck. And that's what we're constantly trying to avoid, being stuck, right? That's how you use options to change the risk reward. Not just, and I'm not talking about just like the UOA stuff. This is using options to risk manage your portfolio. And if you long some of the stuff, it's very important. Okay, so it's all these names, and we brought up yesterday BLNK. This one, I was surprised I'm surprised it's held up here to this date. I mean, this is, they got earnings tonight, and they were giving these things away yesterday for $1. Even the day before, I was looking at these from 34. The 32s were $1.50, only a few days ago, last week. So I'm surprised they didn't have these a lot higher than they do. They probably brought them up. Again, a dangerous level. All these stocks have gotten killed, even with decent earnings. So the one thing that I am looking at, that's why I said, maybe you do a third into the earnings. If it works, great. But you have this set up here, and this, you could see this to here, and then, it's already blown through, but you see how right around this level, if it's a good earnings for whatever reason, and Tesla's up, they decide to move this thing back up, you could see 42. Breaks this and breaks this right here. Okay, this is a big level, 26, breaks that, and you see that. I mean, again, I'm just reporting it to you. I want you to see it. I want you to be able to say, there's nothing there. It's air. It's not like it spent 4 years trading around 18 and 24. It spent 5 days, and then came back and was bought. So, this volume here just took a lot of buyers up here, breaks 26, and, where does it go? Again, not rocket science. There's nothing here, nothing traded hands. So it's going to be very slippery around this area. Could go down, up fast because there's no, volume, and sort of this. See this right here? See how this is different than this? Yep. Volume here will cause it to stop around here when it gets here. Will cause it to sort of narrow down. Here, there's nothing. So this thing over here it could be a little crazy, 26 to 10 to 26. It can go back and forth very quickly as people start to, maneuver whether they want it, they don't want it, and whatnot. So something like blink ahead of this number, I think is another dangerous spot. You have all these fantasy names. They've turned today. They weren't strong on the morning. The market had come all the way up, the big tech names, and these names were, when they move up, you see how they're supposed to move up. They're supposed to move up 20, 30%. These things are moving up, 1%, a $20 stock, Palantir moves up 10 cents. That's 18 cents. That's 1%. That's nothing, right? That means somebody's selling the thing. So you keep those things in mind when you're watching this stuff. If you're looking at entries, exits, whether you want to be in, want to be out, these are all signs and all things that you can pull the story together. Cool. Okay. Cool. We got a lot. There's a lot of stuff here today. So we wanted to, I've seen a lot. You tell me anything I don't miss, but we'll start with, we'll try to go as quick as possible. We won't go so deep, but we want to make sure you see it. Okay. Let's start off with Apple. So Apple is a lot of news all over CNBC. The 50-day, the 200-day moving average yesterday. Stock's trading well, but look how it's kind of giving it back already today. See 124. So it's stuck right between here, and again, you have this sort of setup in Apple. Obviously, this is a trend that's been going on for a while, but there's a little bit of something going on here, right? There's a little bit of something going on here, and then you got your head up here. So it looks a little bit like, a shoulder up here, a head, and then if it starts heading down another shoulder, which people think you can bring it back down to 105. Pick your poison. I'm not sure, but I also will point out that this to this right here, call it to this, gets you right around to 107, 105. So you see how that works?
Yep.
Okay, so that's Apple. Now, newscasters were all positive on Apple, and let's see here. We have a big trade that went up. Just to show you, let's go here. Apple. Let's. $150. I looked at this today. I go, what is going on there? Someone came in, and it looks like because the stock has come off a little bit, it looks like they might have it might have went off the thing. But I'm gonna tell it to you anyway. Just because the deltas are, the probability of being in the money is already out. But they basically came in Apple, and they sold the June 140 calls at 51 cents. So they sold the June. Let's get back in there. Let's see this. It's not here right now. They sold the June 140 calls at 51 cents. That was a closing trade, and they rolled into, or it looks like they closed out of, also the June 150 calls at 208. So they sold the June 140s and they bought back the June 150 calls. Okay, so they sold these a while back, and I don't know if they did it at different dates or not. I have to check, but basically it looks like a closing trade, which means to me, it means that since they're selling out the 140 calls, they had some calls up probably when the stock was in the 135 range. I think they bought it like April 20th, I want to say. I had looked at it before, just around on my notes here. But they probably bought these calls here, let go of some stock. And now that the stock is trading 125, they're getting out of that structure and probably thinking about buying the stock, or thinking about a new options play. Okay, a new buy call options play lower.
Right.
But it was like, it's almost like these placeholders that we've been seeing. Call them placeholders, where they'll buy a big lot of calls, and if it wins, it wins. But on the pullback, that's when they're going to start building a bigger position. We saw that in Las Vegas Sands, which I'll show you in a second. But let's look at, that was Apple. Let's look at Facebook, because we've been following Facebook. Facebook was doing is doing something really interesting here. So they have, where's this? The July's. Let's look at this. Where's my notes here?
Mm-hmm.
July 30. Yep. July 340 calls, right?
Yes. Went out of those, yep, and got into September.
Gotcha. Okay, the 340 calls. So let's just take a look at the July 340 calls. Okay, so they're getting out of these. They got long these, okay, and they're getting into September. So to fill in the story, I'll fill in the story for you. So 350. So they get into that. And today, because I have my notes here, they paid about $4.50 for that. Okay. So what we have here is what's really interesting is that in March, on March 4th, let's look at the Facebook chart. This is the guy we were following. Okay.
Yep.
On March 4th, I hate when it does that. Okay. So on March 4th, right here, he was buying the 300 calls. And this is the guy we spotted, right? March 4th, he bought the 300 calls. He paid $7, 20,000 times approximately, okay? Stock went up. On April 6th, with the stock trading going through to about 310, which we said when we were looking at this, we're saying it probably can get to about 310 right now. And then we said it probably after that, it said, all right, we probably can get to 330. But on April 6th, he sold 20,000 of those calls, the ones that he bought here. He sold them here. And that's when he bought on April 6th, he bought the July 340 calls, for $9. The 340 calls for $9. Stock went straight up to 330. Who knows? Maybe he sold some stock, but now he's actually selling those 340 calls. They went back down. They're now at 415, and he's rolling into September 350 calls. In general, long-term bullish. The guy still loves Facebook. You know, he wants to be long the 350 calls. He started with the 300s. He's now in the 350s. And essentially, if you do the math, he's got it done. Basically, he took in $1. So he's plus $1 on the trade right now. But he has the 350 calls. He's worked himself into a 4-month option that, you know, he's paid nothing for. He's actually gotten paid $1. Nice. Okay. So that's, again, how they do it and how they're trying to just maneuver around. In the meantime, when he bought the 340 calls, I suspect he's long a lot of stock as well. And he was the guy. He's bought the 340 calls for $9. He's selling stock. That's the seller of stock here. You know, he's losing some of the stock, maintaining his calls. And now at 303, he rolls it out to September. And I'm sure he's thinking, where am I going to buy this stock again? Okay. Nice. At what levels am I going to buy this stock? Okay. So keep that in mind on Facebook. That's what we're seeing there. Next one, another big trade. I think it's just, you know, I want to say BlackRock. I want to say BlackRock and whatnot, but they trade in big size like this. So Uber, look, I think it's a smart trade. The guys long, they're long the June calls. It was the 50-50. Things have turned here. So the way out of the money one, which is the one they're rolling out of, is let's see here. Sorry. Is changing. So in Uber, I have the September, is that right? September 50. No, August 50. This one. The August 50-55 call spread. August 50-55 call spread. So they're rolling it down from 55 down to 50, and they're paying about $1 call it. Okay. So one to improve by $5. You pay one to improve by $4. This is $44 now. And they're doing the same thing in December. So they're rolling from the 55s in December down to the 50s. Here they paid a little bit more, about $1. Let's call it $1.50 they paid. I think in the first one it was about $1.25, and this one $1.50. So at the end of the day, I think it's smart. I think, you know, Uber's a great company if it's like a binary situation. It's a great company if Biden doesn't destroy it. That's it. Right. It becomes a gig economy where, you know, all the gig workers got to be employed by Uber. It's not going to work for Uber, and the market's going to sell it until it finds some valuation where now it's like a real company with X number of employees, and they need health insurance. They need all this, everything you need as a company to give. Right now, Uber doesn't care about that. They don't have to think about that. They just have a platform. If you want to work here, you can do it like this. You know, Biden is making a push here, and that's, it will destroy what they've tried to build for many years. So do they want to do that? I don't know. What's going to help? Maybe $200 million in, you know, for the 2024 election might help. You know, that's just me. Nobody said that. That's just me saying probably would help. But, you know, Biden's out there, alpha Uber's head.
But if it doesn't happen, it's a good level, right?
But if it doesn't happen, I mean, like, let's look. I mean, if it doesn't happen, it's coming. It was on its way to 80. Let's just call it, right? The stock is literally, in my opinion, on its way to 80. And, you know, it was trading great here, and then all of a sudden, he just literally tanked the stock. And There's nothing really you could say anything more about that. You just this is the announcement. It's like, yeah, we don't like that, and I don't like the conversation you had with my committee, and that's it. This is what I'm going to say, and you can figure it out later. So there you go. 44, big level here again. Better to be in again. If it's not going to be the case, the stock is going back to where it was. If it is the case, it's going to $30, and let's figure out what happens at $30. Okay.
Cool.
All right. So that's Uber.
Let me before we jump into the next one. Yeah, I have a couple of questions from yesterday that we had. So question number one is, so I'll read this slow so we can catch, because there's a lot of numbers. What do you think about SPY 50 to 100 took 2 years, 100 to 200 took 14 years, 200 to 300 took 5 years, 300 to 400 took 2 years. Isn't it obvious that it's due for a pullback?
Obvious is a dangerous word. Obvious. Everything's obvious to me, in hindsight. But I guess was he asking the same question when it went from 50 to 100, 100 to 200, 200 to 300? Was he asking the same question at 300? Because if you did, it took only 2 years for you to be wiped out up at 400, and at 400 it might take 6 months to get to 500. By the way, it's also percentages. 50 to 100 is 100%. 100 to 200 is another 100%. 200 to 300 it's only 33%, and 300 to 400, 200 to 300 is 50%, 300 to 400, 33%, right. 400 to 500 it's only going to be, it could be 500 this year. So, the law of numbers, starts crunching.
Works against it.
Yeah. But look, at the end of the day, there's a chance if you really want to value it and you want to take out the financial engineering and, all that stuff. I mean, it was a zero in 2008-9. They just held it up, and then they've slowly but surely brought it back to life. But now you see they have to keep giving money. It just here's a fact. If they come out and say, you know what, you're right, inflation is here and we're gonna have to raise rates. If Powell comes out and says that this week, the market's trading down 10%, and give it 4 days. Okay, right. Because nobody would be expecting that. So they can't do that. Will they let it go down 5%? Sure. It's gone up so much. They got to get people comfortable living with sort of that the market could go down, right? And get people sort of secure. But I don't think they can let it crash. It's just, unless there's some outside, something happens on the outside that they can't control, which could be this inflation. It's very difficult to control inflation. Once you let the inflation bag, the inflation monster out of the bag, it's hard. It's like the genie. You can't put them back in unless you control it. It's hard. And the only way to do it is to raise rates and stop things. Try doing that and see what happens. The market's going to be very, very upset. Try to do that. So they have to live with this inflation. We have to live with this inflation. And then what's that going to cause? That's going to buy us 6 months, because actual food prices are going to go up. And I keep saying to you, just remember, food historically has been the cause of revolutions. Okay. People can't eat. They go at I can't put food on the table for my kids. I'm going to that house over there, and he's the CEO or whatever. He's going to give me food. That's the mentality, And guess what? Right now you see, all these mixed races, everyone. I'm Hispanic, so Spanish, white, black, Chinese, everybody's like, fighting against each other. Everybody's got their own little fiefdoms. When nobody can eat, it's like you look at each other like, what the hell are we doing? We're fighting it. Right. Let's go get this guy. It's like, yeah, all right, let's go. And then everybody goes. That's how the world works. I don't know. So I would say the market's in a tough place. I don't know what happens, but it's in a tough place. Okay. Let's say, what's the other question? You have another question or no?
Yeah, the other question is regarding UOA. We talked about yesterday. So UOA is public information, but dark pools, block trades, sweeps, and OTC orders are private. I don't understand how these trades impact the public marketing price.
Good question. In general, I like to only explain things, like really explain things, and say, I'm not an expert in dark pools, so I will say that right up front. However, I've tried to learn, and ask people like, what are these signals that you can get from dark pools? And I'm not sure I get the best answers. Okay. So if anybody wants to explain to me, I always want to learn, and I'll try to poke holes. And if I can, I'll say, this is amazing. So I would love for somebody to teach me. But what I know about some of the stuff that you said, like the options, options are not really, it's not really dark pools. I've never heard of the dark pools and options, so that I'm not sure of. But the take and what the way the bank works is, if someone comes in to buy an order, buy 10,000 options, I'll throw it into a machine and sweep, whatever I can, because remember, it's a conversation and negotiation. So if there's something in the market, if there's something in the market at say 250 and 250 at 260, and I show the guy, I don't want to sell it at 260, and I show the guy, I'll show you 10,000 at 275, and he says 275. I say, yeah, I got to get 500,000 shares of stock in, like, of course, 275 is my best price, and it's a good price. And he said, okay, fine, take it. What I do is I sweep, and that's why people get so excited. It is in a banking order, but I sweep whatever I can, 250, 260, 265, 270, whatever. When it gets to 275, I bid it. Nobody takes it. I sell it. And then I've sold whatever I had to sell. I'm committed. It's called committed at 275. That's the way it usually works. And that's when sweeps are being done by a lot of these things. So when you see the sweeps, those are trades that are committed generally, not always, but generally committed trades where someone is backstopping where the price would be. Otherwise, if you wanted to buy 10,000 options of a name, you might be actually paying 460, 465, 470, 475, and you only bought 2,000, and then you bought 480, 490, 450. It keeps going up, and the market makers they're not selling it to you. They want to push it up. Remember, yes, I told you the banks are the one that control it. So I'm the one that says, I'm going to sell you. If nobody else wants to sell it to you, I will sell it to you at 275. And that's what happens. You get stopped. So I sweep everything. I take everything around the world, and then it gets to 275, and then I have to sell it. And usually I'm the dope selling it at 275 because everybody's front running me. They're buying the stock, and and that's why that position is hard. So I would say the sweeps, and look, I think in anything, there's a lot of talk about a lot of things. I would say find someone who's an expert. Dark pools, I'm not an expert, so I'm not even going to begin to try to say, I know they use it. I'm just not sure that, you can get a lot of information out of it. Maybe not. These big blocks in the pre-market, now that here's a good thing to understand. We learned about ARKK, and we learned about equity swaps, right? I talked about it here, how someone could just put Morgan Stanley can hold my stock for me and nobody would know that I own it. It's just, we have a swap agreement. That's it. You own it instead of me. Stay over there and I can have my leverage and I'm just paying you a vig. Well, a lot of these block trades that happen in the morning, people think, oh, there's a block trade, there's a big buyer. That could just be someone who wants to get a little bit of leverage and just says, hey, Morgan Stanley, you hold it. And I don't want to be the one holding it. Right. And I don't want to be, they might do that as, record, was it holders of record. They do it maybe in front of March 31st so that they don't want the world to know that they're long 1 million shares of XYZ stock. Right. So they say, Morgan Stanley, you hold it because I have to report it. I have to report my portfolio tomorrow. And I don't want people to know that I've been buying the stock until another 3 months. I need more time because I only bought 1 million. I want to buy 5 million. Right. Okay, so they hide, right? Because everybody's looking at the 13Fs. Everybody wants to see. So a lot of these trades, a lot of times they're funding trades, and they're not necessarily trades that are, give a signal for that day. Yeah, I mean, people are long it. Somebody's long 1 million shares, or block trades of 1 million shares pre-market. What is that? What was that? Oh my God, it's not going up and down. It could just have been Morgan Stanley to hedge fund swap, and now instead of one person to hold it, the other is for whatever reason. Okay. And a lot of that goes on, a lot of that, because it has to actually print somewhere. It has to trade somewhere in order, but doesn't it have effect? It's not, oftentimes no, but the trader can make it look like it. They can say traded on the offer, so, if I'm the trader, I got 1 million shares of a swap that has no effect. I just got to print it. And the market is 5.25, 25.25, 25.40 in the pre-market. I say print it at 25.40. And then when we print 1 million at 25.40, as a trader, I go, now buy 20,000 shares at 25.50, 25.50, just buy it. And then all of a sudden everybody goes, oh my God, there was a big block, and they start finding it. So it's all games. It's all little trading games, if you will. Right. Some trader having fun, and I would sit there half the time, but the book was so big, I want to mess around, just go buy some stock and, watch everybody go, oh my God, this is what's happening. So, this is how, look, there's a lot going on. I'm not sure about the dark pools. So I would say find an expert, but get a good explanation. And then when you do, come over here and ask me, because I would have questions as well behind it. Right. So anyway, cool. That's that. Let's get back to business, back to your way.
What do you got next?
You know what? I saw the last 2 days, this TAL education and EDU, a lot of put buying in TAL and EDU. It's also related, another Chinese one. It's GSX, right? The GSX was ARKK, but this thing is just falling apart. This this thing, they've been messing around with puts over the last couple of days, and we can look at EDU. Stock's down $2 today. I mean, geez. Yesterday the guy came in and bought these for 40 cents, 12,000 times. Okay.
Nice.
No, sorry, the Junes. He came in yesterday, but at the end of the day, they bought these. Yeah, coincidence that the stocks are down 15%. At the end of the day, came in, they bought these at 13,000 times for 40 cents. They're trading a $1.50 now. Today he comes in to buy 20 something thousand of these again for like 30 cents. So somebody's in the know here. Somebody knows something. But the difference today, let me give you the caveat. The difference today is that he did it with on a spread 16,000, and that means that he also bought stock. So he looks like he might have covered. He could have, if somebody did this for him, he could have covered at 1041. He could have covered with some stock here, you know, in order to do the trade. He let's see what maybe this one they give it a 65. They give it a 25 delta, so he could have bought back 400,000 shares short and did this in here. But there was a spread somehow, nothing else traded, and so you know, he could have bought back stock here. So being short, buying puts, gets the win. Now he's actually probably covering some of this, right? He's actually buying puts and buying stock.
Right. Mm-hmm.
Okay, so he's covering some of this win right here. So that's EDU down 15%. Let's look at TAL. TAL, they were getting out of a lot of stuff in May, yesterday and the day before. They were getting out a lot of stuff here. These open interest numbers went down. This is down 12%. Today I see that they're all over this stuff now. I didn't have a chance to look at the news, but these names are always, you know, the word fraud is always circling around these names. Chinese names. They go on the story, on the fantasy that how many people need education in China? We have online education. The problem that the shorts have with these names, and it's always a red flag for investors that are looking at these types of names, is that they have a structure. The companies, it's not like it's one company and they have everything. They have all of these different entities, and money shifting from here to there to this person, that person, this entity, back and forth, and it's really hard to keep track. They have the shorts are saying that they don't really have that many students. What they have is they have a lot of people that are fake students that they post, and ultimately they can refund. You can refund their money, and they're just doing this thing where they're just shuffling around where money's coming in. It's looking good. Revenues get put up, but then there's refunds and things come out. In the meantime, there's marketing expenses. So the company's not making any money, and they're just raising revenues like crazy.
Wow.
And you know, people think that that's part of the scam, right? It's, I think they called it like brushing or something. It's basically, you know, people like revenues, they like growth, they like the story, and as long as it's doing this, and then they could stop the advertising, there you go. Now, the bulls say, we've had auditors look at it, and everything looks fine. We've had this, and other agencies, whatnot. Who knows? That, you know, somewhere in the middle is the truth. This is fraud, or it's not fraud, or maybe the shorts are looking at one entity and only seeing one piece, and that's not the whole pie. I don't know, but always there is fraud in these names, fraud talk, and this thing is trading like it's a disaster waiting to happen. So I'd be careful here. You know, this is a tough spot. I mean, the guy's buying puts here again. They've been buying puts for a week. Let's go to a week, and it was really rolling. They were rolling out. So that's TAL and EDU.
Cool.
A couple other names. It's just there's a lot of names. I feel like there's a lot of risk reward type of names here. AZN, okay, AstraZeneca, the the September 60s. So let's just look at AZN. You know, this thing has been hanging out for a while. So we have here, you know, obviously with coronavirus, things are looking good. They just made an announcement, I think, with Pfizer here, but this thing's on the up and up here again. You know, the drug stocks look, the charts look promising here. They look pretty good, and a lot of them are cheap relative to, you know, when people are getting out of these high flyers or I have no earning stocks, they look for value, right? So in times of inflation, people go to things that are cheap, that they feel like, okay, this is a real company, it has earnings, I can, you know, put my hands on it, and I understand it. And so AstraZeneca, they are buying calls here they are buying, where are we? Let's open one up here. AZN. They are buying the September 60 calls 11,000 times. They came in. Look at 1023. This is somebody who put this trade up, right? So it looks like they came in. They probably swept something at 112, and then they traded 9,098 at 116. Okay, so that looks to me like the way it's traded looks like a buy. It also happened at a time the stock was moving up, and volatility moved up a little bit. So AstraZeneca buyer here, the 60 calls. Again, you look at the high, they traded 63 on good positive coronavirus vaccine news back in the day. Haven't read the article yet, but I did see it earlier, mixing Pfizer and AstraZeneca vaccines increases. And you can take a look at some of these articles, see if it makes sense to you. Okay, so it's AstraZeneca. Let's go to
let's also make sure we go over LVS. LVS was a big one today.
LVS. Yes. LVS, Las Vegas Sands. So what did we say in Las Vegas Sands? Let's just take a look at Las Vegas Sands. We talked about it in the last week or so because we saw what I call a placeholder, right? Placeholder trade. It looked like somebody just throwing a placeholder. They did it right around here, I think, right? It got to here, and it looked like it was like the 63. We have it here, the 63.75 call spread. So 63.75 call spread was bought a lot. I think it was 25,000 times. So they bought it right around here as the stock turned lower. It would hit the 50 days coming off. I think it was only for about $1 and change. And I told you, I think they're doing that as just like, if it goes up, great. But if it comes back, they're probably thinking the risk is to the downside for the near term. And if it comes down, they want to own it. And they want to own it somewhere around the 200-day I was telling you right anywhere between 54 and it hits 52. I think I was saying that range right around here. And today is a massive trade. It looks like he's basically reducing his position on he's starting to reduce that call spread, and he's starting to get into a much bigger position lower. So he's actually the June 4th he was in. And again, we've been talking about why June 4th. We talked about a conference. We'll talk about that in a second, but it looks like you can see he's getting out of the 60 calls. Okay. Right. He's also getting out of the 63.75. The 75 is like a penny, 2 pennies. So that's why it's not on the board. You don't see it, but he's getting out of the 63.75, 7,500 times. He's selling the 60 calls, and he's rolling all of that into any of that money into 17,557 calls that he bought. 17.5. On top of that, he sold 17.5 of these calls, of these puts, the 50 puts, to take in about 45, 50 cents.
Nice.
Okay. Which is interesting. It's an interesting trade because he's when you do the put and the call, it's like buying stock with the middle sort of, he still doesn't know, but he's saying, you know what, at 50, I'm a huge buyer of Las Vegas Sands. Now, Las Vegas Sands is banking on Macau opening up. That if Macau opens up, then it's, this thing starts getting going. We got to get Macau opened up. The part that, was confounding was on June 4th. Why June 4th? Somebody said there was a conference, and I just think, he's big on June 4th for whatever reason. And maybe they're going to make an announcement. Maybe he knows of an announcement. Maybe there's something brewing that they think there's going to be an announcement. Like I said, the earnings transcript, they're really bullish on getting along the online gambling space. Maybe they come out and they make a statement, or they make a move, and they start saying we want to be the biggest players in the game. Who knows? But June 4th, we're going to watch this. On top of that, they were here and they're buying. They're messing around all over the place. There's big trades going up, but I see that they're buying the August 60 calls. This makes more sense to me because this has earnings, and we see how fast this can move. Las Vegas Sands is a name that can move very quickly. And there's a lot of hedge funds that like this name. A lot of big money guys like the name. You can look at BlackRock. They're long the name in big size, one of the top holders. So, I'm curious to see what Melvin Capital has done in the first quarter with Las Vegas Sands, because it was one of his biggest holders. So I'm excited to see that over the weekend or whenever it comes out. Okay. So that's Las Vegas Sands getting longer now. And you can tell that they're a little bit more confident down here, because not only are they moving out a little bit, but they also are on June 4th, they're selling those puts, the 50 puts.
Right.
Okay.
Looks like a great one.
So keep that in mind there. Now we have what was it? Goodyear tire?
Yes, Goodyear. Yep.
Goodyear tire. Let's see, I got a couple more of these. And Goodyear tire, the 22 calls looking like they were bought earlier 11,000 times. You know, someone looking at Goodyear tire, let's look at the chart here. Looks interesting. I mean, it's trading well, looks good. You don't want to see it break here because then it would be such a big move, and then the MACD, you'd have a MACD diversion. Let's just show it to you. Right, so you have sort of this going on here, and you had this. It broke a little bit, came back. That's not necessarily so strong, but I'm also looking at this down here, right? I'm looking at the MACD, right? You have a high price here, and you have high price MACD here, high price, and there's, you know, the MACD is a lot lower. Okay, that doesn't mean much because we still need a little to expand out a little bit more and see what's really happening here. But they're buying the July 22 calls. If this can recapture 19.5, let's see if you get earnings on that July 22 calls. You don't get earnings. Maybe it's going to be close, but you don't get earnings. But it gives you a couple of months to sort of see things, and let's see where the ARKs are. ARK 22 calls. Probably buy the ARK 22 calls for 3 more months, you know, for an extra 50 cents or so. 22s, they're $1.10, and these are 50 cents. So an extra 50 cents. Seems like the ARKs might be a little bit more interesting.
Cool.
Okay. Let's see here. The Coca-Cola. By the way, in GT, always look at this, right? If you want to get an idea of where he thinks this thing is going, you would say something like 26. That's too high. We're trying to get the pointer right here. I said 36, 26. So there it is, 26. We'd get the pointer right around there. So, you know, at 1911 over the next 2 months, 26. You know, maybe we could push it even down to like 25. 25 would be $3. So 50 cents to make 250, 500%. I'd even go back down to, 25, 24, somewhere around there. But he's buying something way out of the money. That's why it's forcing you to go out. It's basically saying, hey, if you really thought 25 or 24, you should buy the 20s.
Right.
Okay, so keep that in mind.
Cool.
Let's see. I'm going to do 2 more. Coca-Cola.
Yep.
Coca-Cola. This one was tough to tell whether or not, I was looking at this, whether or not it was a buy or not. I'm not completely confident that it was a buy, but you have here the volume going through 56 cents. You know, it's all over the map. IV, let's go back in time. Let's just see it as it was going. 1101, it trades 56 cents. What made me think it was a buy was the timing and how it was moving. Nothing's trading, and then all of a sudden it trades 54 cents, 54 cents, 55 cents, 56 cents, 56 cents, and that's where the big prints were. So you see, if someone came into me, I'm looking at this because I couldn't really tell, and it looks like a bid, but the stock was moving well. So I'm looking at this going, okay, if I was the market maker and the customer came into me, I would say, this happened so fast that I can bid for them 54 cents, take the offer. It turns into the bid. Now I'm bidding 54 cents, nothing happens. I bid 55, I take some. I bid 56, I get hit, and whatever the stock moves, and I basically print the other 27.46. So the way it worked here, going up 5 minutes in a row, and it went up, and then it printed at the highest level, to me looks more like a buyer, even though the bid it looks like the machines are saying it landed on the bid. Okay. So, that's one of these situations where, if you're just looking at these 2 gray areas, you might get the wrong impression. I think it was actually a buyer.
Okay.
All right. Cool. So that is Coca-Cola. And again, June 4th, maybe they're hanging out with Las Vegas. Maybe Las Vegas is going to take out Coca-Cola. I don't know. So we got that. And last one, PBR. PBR. Goes with what we've been saying. It looks like there's a little bit of call selling. I seen the call selling here today in the 11s, and stocks down. Go in the June 16th. These traded earlier today. Looks like they were selling. They were sold. These 13, 14. No, these look like they were bought now. Let's look at this. Hold on. Those look like they were bought.
Okay.
But let's look at maybe that just transpired a little bit later than when I saw it. I thought I saw some sales. Yeah, so these look like they were selling. Okay, so they were selling must have happened after I looked at it. The July 11 calls, they were selling these, and looks like they were just taking a shot here, or let's see the open interest on the Junes. They might be short the 10th and maybe buying the 11s just to protect it, but it looks like they're buying these. I don't know why. In general, the flow we've been seeing in the energies is on the big moves up. They've been selling calls against it and buying puts. I showed it to you yesterday, and this was the same theme. And in Exxon and stuff, you're seeing not as big as yesterday, but Slob, Halliburton, Exxon, you're seeing a little bit of call selling up top.
Cool.
All righty.
All right.
Good. I'm gonna have to cut it a little short today because I gotta run out.
Okay. Cool.
All right, my man. Good. Make sure you tell people to like the videos. We need them.
Will do. We definitely need them. We appreciate all the likes, guys, subscribes, and great words and comments we get from you. Felix, thank you for a great session. Thank you for a great week.
Perfect.
We'll see you all next week.
See you guys. Be good. Thank you.